Greetings. This video is going to be an update to a video I did in the first half of 2021, which is why gold investors and people who advocate gold as an investment strategy never discuss the terrible returns of investing in gold and how they don't understand the first principles of finance or technology. So this is an update for the second half of 2001 because it's about 6 months after that first video, and you can access that first video in this tile up here. People believe that when interest rates are very low and money printing is being done, then that causes inflation, and when there's inflation, gold goes up. Now, this is an erroneous belief that may have been true a century ago or even 60 or 70 years ago in the pre-technological age of the economy, but it is conflating a correlation that is not there. It is very analogous to how many centuries ago people thought that the sun revolved around the earth, just like the moon revolves around the earth, because when standing on the ground, the sun and the moon may appear to have similar motions, but over the centuries we obviously figured out that it's only the moon that goes around the earth, and the earth in fact goes around the sun. That would not be obvious from just standing on the ground if you were living in the 15th century or earlier. But the same is true with these people who advocate gold, even though these are decorated people with PhDs in economics or are otherwise money managers who supposedly manage other people's money and have found a group of clients who don't seem to care about bad returns, or what they tout on the media is not what they actually have as their investment strategy. That's possible as well. That's how some of these people don't lose clients, because what they say in the media is not their private investment strategy. And there's nothing illegal about that per se, but it is questionable insofar as it is an example of do as I say, not as I do. Now, here's the fundamental problem with even this basic investment thesis. As you see from all these videos on my channel, my atom thesis describes how technology is rising exponentially, and technology inherently generates deflation. That deflation percolates throughout the economy, and high-tech products and services are now 3% of the world's economy and rising. That number is rising and is currently 3%. It was only 2% in 2016, maybe 1% 2008, 0.5% in 2000, and in the 20th century, too little to distort any basic macroeconomic statistics. But now it's getting large enough that it does distort macroeconomic statistics, and explains why we have done $31 trillion of quantitative easing without there being any aberrant inflation, as I describe in my most recent monthly update over here. Now, when we think about why anyone would think gold should go up, consider the assumption that printing money causes inflation, and that could have been true in an era of materially intensive products like houses and cars, but now in a software world that is obviously not the case, because greater demand for a software product does not create a supply shortage, because software is dematerialized. And that is true of any knowledge-based product if it is sufficiently dematerialized. Not just software, but pharmaceuticals, semiconductor chips, and even music and things like that. These are things that just cannot run out of inventory and be affected by supply chain bottlenecks to nearly the same degree, and therefore are not vulnerable to inflation from money printing. And then the second assumption is that there's never anything that can increase the supply of gold. That is itself absurd, because if the price of any commodity rises, then the incentive to increase supply rises exponentially. That is why when oil became too high, you found people who made hydraulic fracturing viable and increased the supply of oil, and oil prices got crushed. As I describe in this video over here, I made a very famous prediction way back in 2011 about how oil would eventually fall below 70 and stay below 70 pretty much forever and ever. And that has continued to be true. It's one of the best predictions I made. It's a very famous prediction. Thousands of people are familiar with the fact that I made that when I did. And the same is true of gold. Anything that increases the price of gold will simultaneously drive more people to look for more supply that brings the price back down, because gold is an inert commodity. Whether it is through mining of asteroids, whether it is through greater prospecting of gold through drones, whether it is through accessing supply that was previously too expensive to access. And we are in a technological age where this effect is far more powerful and pronounced. And that is why technology always increases the supply of commodities. And that's why the quotation at the beginning of this video was, in fact, that any bet in an inert commodity such as gold or silver or oil or anything like that is effectively a bet against all technological progress. It's not a bet against necessarily any one technology like AI or AR, VR, or quantum computing or distributed ledger or anything like that. All those technologies are interconnected into an accelerating medium. That's why I call it the accelerating technonomic medium, or ATOM, A-T-O-M. And any bet that commodities will go up is a bet against all technological progress. That's why all those talking heads who say that the Federal Reserve is printing money and therefore gold will go up, they are just extremely wrong. And I have a lot of videos debunking a lot of high profile individuals on that point. The third problem in that assumption is that the central bank of one country, the United States, is printing money, yet a worldwide priced commodity such as gold, but also silver, oil, or anything like that, would go up in price. The US is not the only country in the world, but they are effectively assuming that it is. Obviously, they know better in an academic sense, but when they say the Federal Reserve printing money will cause gold to go up, that is shockingly comical and ridiculously short-sighted for someone who is supposedly a well-educated person to say that. I would love to be able to point this out. You know that the United States is only 25% of the world's money printing, and it's only one country. So how can the Federal Reserve be the one causing gold to go up? So let's look at the long-term returns of gold versus equities. And this is the 30 big equities, not just technology equities. This is the Dow Jones Industrial Average. If you go back a century, in fact 105 years, this is the return of the stock market relative to gold over a hugely long period. Gold is terrible by comparison. Now if you take a 10-year return, the divergence is widening more and more. As we get into more of a technological age, this divergence continues to widen. And that is why this thesis of how you should be in gold and how the people advocating for gold have never actually been on record advocating for the stock market. So all of these various people who are advocating be in gold, they don't advocate for the stock market. So their advice is just terrible. Over 10 years, gold is just 20%, the stock market is 190%. And the stock market certainly is due for a correction, and that could happen relatively soon, but gold would also go down. That would not bring the stock market down to the level of gold. These are the basic fundamental first principles of technology and economics. So we saw a 105-year chart as well as a 10-year chart, and this is quite indisputable. Now, as you may know, on this channel, there are a lot of videos where I individually parse word for word what a lot of these gold advocates and inflation fearmongers say. And some of these are ones that I will show that we have videos for. And for that, we go to part 2 of this video.